Yo, what's up you guys? Welcome back to another video, and today we're going to do the usual weekly market update. So without any further ado, let's first go through some of the questions that I have received. Let's go to today's. Rolio, thanks for the content. What's the correlation between, not so I think I'll answer that one, but the correlation basically is when the 10-year yield bond is used as an indicator to determine the overall direction for interest rates in the dollar index. Love your analysis, always on point. Thank you. I know you do not trade ICT concepts. What's the difference between market structure, shift, breaker structure, and change of character? I don't know what change of character is. However, market structure shift is basically when the market prints structure to the upside and it prints resistance, retest support, breaks resistance, retest support. When the market's of structure, then it would break below support. That support would then become resistance, and every support that got created before would then become resistance. And the break of structure is every time the market would break through a structural level, either to the upside or to the downside. Next up, Mr. Letlenoholo, thank you for the knowledge. Would you be able to explain what psychological levels are and your thoughts on the concept? So psychological levels is basically round numbers that are created in the market. So if you look at the trading view, you'll see here we've got a list of round numbers, right? Now there is a high possibility that the market will U-turn once it hit these levels. But to use it as a further confluence, what you can do is always look for previous structure that lines up perfectly with these round numbers as well. To give you an example, if you look at this level over here that got broken as resistance, so it got retested as support. Now if you look here, you can see that we do have the psychological level, which is 100. So this level over here is a psychological number. Now when the market broke above resistance before it came to retest support, there would have been a high possibility that the market come to this level, because this is a psychological level where the market would U-turn from. Now I normally look at this as previous support and resistance levels in the market, just not to confuse any people, but that's kind of the idea behind it. Here we have a round number or a psychological level, and this would be 90, and this was also a level that was acting as a support previously also. Hope that makes sense. What's up, bro? Can you break down GJ on your next breakdown? I've added GJ to the watch list, and thank you so much for the education. I've learned so much from your videos. Thank you. Next breakdown, I've added the German 30. I've also added the S&P 500, and there is a high correlation between the NASDAQ and the S&P 500, which you will see now. Thank you, Mr. Rolio, for the knowledge. Thank you for all the knowledge. So wish you can start a mentorship program where we get days by, we will watch you live trade. Yeah, again, it is not like, it is something that I have highly considered to do, but you guys must understand that I've been getting a lot of backlash from a lot of people, and it's left a very unpleasant taste in my mouth, because I have never ever in my entire life have I been have I taken anything, have I scammed any person? Let me just say it to you guys like that. And the most frustrating part that comes with that is, again, I will always go back to this, is that MDP is a company that refuses or just decided to not pay out their people at all. And I mean, there's nothing that had happened to them yet. They still have the money that they owe me and a lot of other people, including first class forex funds, right? And the people are not investing their energy and their time into getting these broker or getting these prop firms exposed. Instead, they come to me, or they come at me. Why do they come at me? I haven't done anything to any person. I haven't taken any person's money. I haven't scammed any person. I don't do signals. I don't do mentorship. I don't do any of those stuff. What's your problem with me? No. That's why mentorship and signals, those stuff leave a bad taste in my mouth, because I've now also heard, because some person said that you need a license to send signals. But then you've got people like Ricardo Sonos, you got FX Good, you've got the whole Instagram who's sending signals without the license. But there's like, yes, you don't send signals, you need a license. It don't work like that. So that's something I would highly consider. But for now, these things has left a bad taste in my mouth, where I'm probably going to end up having to sue for defamation. So we'll talk about that on another day. Make 70-day per comment. Your videos reflect time and effort you've invested in the channel. It's paying off brilliantly. Thank you. Mars Ramo Chris is saying thank you for the videos that you make. Your work is truly appreciated. Thank you, thank you, thank you, thank you. I appreciate these videos, guys. Now the first thing that we are going to do, take a look at, is none other than the dollar index, which is obviously the driving pair behind this. But I do want to go over some fundamental data that got released for the index there as well. First article comes from CNBC. It says here, safe haven gold rallies over 3% as Middle East conflict intensifies. That is very, 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 that's a very sad story for what's currently happening on the other side of the world. But because of that, gold has seen some rally. Apart from that, there was also the fact that the Feds were probably not going to hike the interest rates for the rest of the year, which it's reading on the next line. It says here, gold prices jumped more than 3% on Friday and were poised for their best week in 7 months as intensifying conflict in the Middle East sent investors scooting for safe haven assets. So you obviously know whenever there is, like with COVID, investors tend to put their money where it's safe, and that is with gold. It says here, investors kept a tab on developments in the Middle East conflict, which has unserved markets since the start of the week. And then there's a whole story about that. So that's one of the reasons why gold was so very bullish on Friday, that we've probably seen. And also the S&P 500 closed lower on Friday, but still notches a second straight positive week. And it says here, stocks fell Friday, pressured by a spike in oil prices and rising inflation expectations as Wall Street wraps up a volatile week also. And we obviously had some CPI data that came through. It came through at 0.3%. Previously at the core PPI, the CPI data was surprisingly lower. And this is one of the reasons why it was said that the Fed might have reached their peak in terms of hiking interest rates this year, and they are less likely to hike interest rates. My overall bias on the index for the week going forward, I do see it going bearish, because I do not see the dollar strengthening any further. And you can see the price action played out perfectly. We once again have this potential head and shoulders pattern here. Also have this impulse, so we got that correction, and if they take the Fibonacci from the high to the low, we also have the confluence of this 61.8, which is known as a golden ratio in the market as well, where I do expect to see some pullback in the market here as well. So yeah, it would be good to see, and I guess the best thing to do is just wait for the market momentum to start shifting bearish, because we are still quite bullish on there also. Next up, we've got US oil. I've had a good run with oil the last week, and if you guys follow the breakdown, I did say that we can expect the market to fill that gap, and it did fill the gap, and then it went up higher. It was in a buy here, had a buy limit after I did the breakdown. The buy limit got triggered, and I was able to clock in almost 5% on that trade. What I do see now is the obvious thing. We are trading close to very important structure, and I guess the obvious thing for any retail trader to do is to think it's going to make a U-turn. However, I do see it going slightly higher, pull back, then continue higher. In doing so, will the market print what's known as a W formation, and a W formation is considered a bullish pattern from a technical standpoint. Next up, we've got gold. If you've got me on Instagram, you'd have probably seen that I was in gold sword there, base of structure and base of expecting the dollar to increase slightly in value, and which it did. However, this spike in gold was because of the news regarding Israel. So this is not something I could have foreseen happening, because I don't control that. However, I was right in the direction, not really right, but I was right in the way that the dollar was going to strengthen further. That is why I was expecting this move down. Unfortunately, you can see the dollar was bullish and gold was bullish, and that is something that never happens unless there is very much reasoning behind it. Gold, however, is now set for a slight U-turn, slightly go higher, then pull back to this level, and then we can definitely expect it to continue higher. For as long as this situation continue, what we have here is a market that broke below support, then came back. The resistance clearly didn't hold. All of that resistance is now once again turned resistance, and this is again once again a break of structure. And you can see here we're now also shifting from bearish to bullish in the short term on gold as well. NASDAQ also went exactly as anticipated. Hopefully somebody was able to get in here. Now we do expect to move to the upside. We have this W formation once again that got printed to the neckline, and I do expect this market to continue higher from where it is now at the neckline, and that is exactly where it is. We also have a massive impulse. After an impulse, we expect a correction, and we got this 0.382, sorry, the 0.50. I do expect a slight pullback, and then definitely continuation to the minus 0.27 of the Fibonacci taken from the low to the high of the W formation. Also, US30 went exactly as anticipated. I hope you guys do actually follow the breakdowns, because there's a lot of work that goes into the breakdowns, because there's a lot of research I do beforehand, and then most of what I show you guys is basically, you know, it's a summarized version of everything that I need to do. And guess what? I charge you absolutely nothing. I think I must charge people for it, because then maybe well, you know, but there's a lot of liquidity in the market, so there's no reason for me to take your money. In any case, let's continue. What we have now is definitely a continuation expected. We have an impulse correction. We take the Fibonacci from the high to the low. We're going to pull back to the 0.382, which is exactly what I said was going to happen. And we can expect this move to continue to the minus 272, as that level is also lining up perfectly with this previous level of support that is now turned. You guessed it, resistance. Next up, we've got GBP JPY. Now, GBP JPY obviously broke down. I said that we were in this consolidation. We had a break below structure, retested, moved down to exactly where I said we're going to go, pulled back to the structure, moved down. What I do see is a new move, a new range potentially. But in the short term, what we have here is a market that broke below this structure. So again, we are testing support. I do expect a slight pullback to the upside, and then a continuation to the downside. And that is about it. Next up, we've got the German 30. Also, the German 30 went down, down, hit that level, moved up, hit that level, pull back down, back at that level. And I would be I almost said very important. I would be very careful with this, because if a market comes down that aggressively to this level, do not foresee the market hold. I would say we wait for a clear break below this level, and then definitely start looking for sorting opportunities there as well. Next up, we've got the S&P 500. The S&P 500 spreading similar price action that we see on the NASDAQ 100. We had a clear impulse, so after an impulse, you expect that correction. If you take the Fibonacci from the low to the high, we have a 0.382 pullback. And that 0.382 pullback is also lining up perfectly with this previous level of resistance that got broken, that is now acting as a level of support. Guys, that is it from my side, right? If you do have any questions, please feel free to ask. And if you are new here, please, I advise you, okay, make sure that you go over the description in my channel. And if you want to know more about me and what I do, please go and watch this video, so that you can know exactly what's going on. That is it from my side. Thank you for your time, and as always, cheers for years.